Alibaba just announced a 100 billion won donation program to promote common prosperity across China. That's the equivalent of 15.5 billion US dollars. This is on the tails of Tencent announcing a donation in the same amount. Are these actually donations? I'm not convinced. Let's dig into it. You're watching More Money. Let's get it. What's up, guys? Tay here. You're watching the #1 channel on YouTube for people that want to retire sooner. And we're doing something very unique on this channel with deep dives into companies and free valuation models for anyone to download. No paywalls at all. So I'm really glad that you're here with me. And let's jump right into it. So Alibaba recently announced a donation of 100 billion won or 15.5 billion US dollars to promote common prosperity across China, which is expected to be paid by delivering key initiatives by 2025. And to be honest, guys, I don't think that this is a donation, and I'm going to explain exactly why I feel that these are investments in this video. And speaking of donations, I really hope that you find it in your heart to donate a like to this video. It really helps YouTube know that this channel provides valuable content, and thus they'll share it with more people like yourselves. Okay, so Alibaba's reasoning for making the donation is because they feel like they have been the beneficiary of strong social economic progress in China over the past 22 years. And it really comes at a peculiar time, as it seems like every large tech corporation in China is becoming a bit more philanthropic as of late. As I stated in the intro, Tencent also announced a 100 billion won donation recently. And those two tech names aren't the only ones. Pinduoduo recently launched a 10 billion won agricultural initiative. And even JD.com is expanding benefits, including health insurance for its delivery drivers. So what I really think is that you're seeing two things. The first one is a major taxation policy shift for the Chinese government. What a lot of people that invest in China may not necessarily know is that until now, the government has largely propped up the technology private sector due to its perceived importance of job creation in the country. The standard corporate tax rate in China is approximately 25%, but technology companies are paying somewhere in the low double-digit percentage points. So I think these donations by the technology companies are in part to fend off the government from rolling back the tax incentives which they are enjoying today. And I've said it before, I don't think these donations will over the long term stop the government from rolling back the tax incentives. I think it's only a matter of time until the largest technology companies are paying the appropriate tax rate. In my opinion, I believe that when the government does start changing the taxation policy, they will be forced to do it slow just to make sure that they don't cause too much shock in the system. But that being said, the Chinese government isn't necessarily shy in sending a shock to the financial systems, as we have seen lately. The second item that I think we're seeing is the Chinese government threat to rein in wealth disparity. In China, the top 1% already holds approximately 30% of China's wealth, according to Credit Suisse. And the real problem, in my opinion, is that in China, the technology companies have built up oligopolies. Now, as an investor, this is great for me, but I'm not sure if it's really good for the country as a whole over the long term. Part of the reason why the Alibaba series was 6 videos deep was because of how many businesses they actually run in China. It's unheard of to see a business with that many segments in America, other than maybe Berkshire Hathaway. So I can see the government's reason for a common prosperity campaign. They are focused on uplifting the average Chinese citizen, and it looks like up until now, they're going at it with a capitalist type solution to get there. They are allowing the large companies to decide on how to best allocate their resources to create a common prosperity. And this gets me to the main point of this video. Are these really donations or are they investments? And I don't seem to be the only one who's skeptical here. Rui Ma, an expert reporter on Chinese technology names, recently tweeted that she does not think that these are donations, rather investments into ESG projects. And to really dig into that, let's take a look at the 10 major initiatives that Alibaba is investing into. You can see those 10 major initiatives right here. And from this, it really screams that these are investments, because if we just look at the first line, which is increasing investments in technology to support the digitization of the underdeveloped areas, who do we think will be the largest beneficiary of a more digital rural economy? Probably the technology companies like Alibaba. Moving on to their second priority, they want to support the growth of micro and medium-sized enterprises. Does this sound familiar? Well, if you remember, in their Q1 2021 financial results, their EBITDA in their core commerce segment was actually down because they made investments into key strategic areas. What exactly are those key strategic areas? Well, here you can see that they mentioned that the slower year-over-year growth was primarily due to spending on growth initiatives with within the China retail marketplaces such as Idlefish, Taobao Live, and here's the most important point, they provided additional support to merchants. So the company that's already investing in their merchants and taking financial statement level charges on it has pledged to support and grow merchants. This honestly sounds like normal course of business to me. Moving to the third point on their list with supporting the industrialization of the agricultural sector, this sounds like a very good thing for a company with a business that's large as Fresh Hippo, a national grocery chain that's looking to source more fresh foods for their Chinese expansion. And moving to the fourth point on their list, they're looking to support small and medium-sized businesses expand into overseas markets. And of course, you know that expansion is going to be done on Alibaba platforms. Do you see where I'm going with this, guys? And I'll do one more. If you look at number 6, they're going to improve the welfare of gig economy workers. I mean, this makes sense since Alibaba owns one of the largest and fastest growing gig economy apps in China, which is Eli.me, which is equivalent to our Uber Eats or DoorDash. The government has already come down hard on ensuring that gig workers make at least the minimum wage, and I fully support this. You guys may recall that I actually became an Uber Eats driver for a 4-part series on this channel. And although I was usually earning approximately $25 an hour and about $20 an hour after all of the costs, I could have easily been earning much, much less. If I just took every order and sat in the long drive-through lanes or took orders that I knew weren't going to tip, I would have absolutely earned less than the minimum wage. So are there drivers being taken advantage of by tech companies in the gig economy? I don't think they are purposely being taken advantage of, but I believe that there are drivers that are being disadvantaged by just taking every order. That's absolutely happening. China is pushing to ensure that everyone gets a minimum wage when they work these types of jobs. So although Alibaba refers to this as part of their donation, I'm not buying it. This is really a requirement from the government that they have to address. In other words, this is just ensuring the minimum wage is being paid. It's one of those, you guys fix it now, or we'll come and fix it later and we'll make it way worse for you. And I think Alibaba is making the right move. With JD.com offering benefits to their delivery drivers, I think Alibaba will likely have to do the same here as well. So I think that announcement is coming in the future sometime. So am I completely cynical? No. You can see that they're attempting to do good things, but it's very clear that a large part of the donation is really just an investment that will inevitably benefit Alibaba. And guys, I've been in many of these boardrooms over my career. These guys already have the eggheads in the office crunching the numbers to generate the highest potential return for the dollar spent. You bet your life that they're doing that. So does this change my thesis at all? No, not at all. It doesn't even change my valuation, which you can grab from the description below. 100 billion won over 4 to 5 years doesn't materially move the needle, and they can likely capture a combination of price increases, growth, and cost efficiencies to make up for it. Now guys, this channel is quickly becoming the Alibaba show, which I promise you it's not. I've been doing quite a bit of research outside China stocks. For example, in my next video, I'm going to be diving into the reasons behind Michael Burry's big investment into pharmaceuticals. And as you guys may recall, we on this channel broke down Cardinal Health, and I gave you guys a free to download model. So I think it's really cool that Dr. Burry is thinking along the same wavelengths as we are on this channel. So to be sure that you don't miss out on that video, please subscribe to the channel and hit that notification bell to be notified when I upload that video. Okay, guys, that's it for now, and I'll see you later.